Welcome back. We are discussing geopolitical risks and a lot of it actually in the market right now. Of course, top of the list is with the election of Boris Johnson. Well, it's called the bicycle guy as the UK Prime Minister. The chances, or rather the risks of a no-deal Brexit just shot up. And this is being reflected in the UK asset prices, and of course led by the British pound, the GBP. Again, some of the world measures, especially the euro and the USD, has been taking a pounding. To help us discuss more of this, and as well as African stock market performance, we have here with Rolly Kipkemo. Rolly is a senior analyst with Nabo Capital. Rolly, welcome.
Thank you so much.
Of course, you're not new to this, you've been here before.
Yes.
Really, geopolitical risks, a lot of couple of developments lined up. Obviously, top of the list, we are following the fact that, Boris Johnson. Yeah. Chance of a no-deal Brexit just got high, and a lot of countries need to be worried, actually. And I think the global markets are factoring this, and we can see this in the GBP performance against the USD. But before we get to the Boris Johnson story, the US Federal Reserve Federal Open Markets Committee is meeting tomorrow.
Yes.
The FOMC. They're sitting tomorrow.
Yeah.
What are your expectations?
Well, consensus in the market is that there'll certainly be a cut.
Yeah.
But now they may surprise us.
Yeah.
They may come and say we are holding it flat. But based on what the president is saying and based on how they've been communicating in the various meetings they've held with the public, there seems to be sort of a consensus that there will certainly be a cut. Now the question on whether it will be 25 basis points or 50 basis points, then that's where we might not really pinpoint. So I think they may want to go gently a bit to see how the economy responds to that, and then maybe take further action further down the line. So, but the consensus is certainly a cut.
What's a key decision point in this? Is it that inflation is becoming a problem in the United States, or is it that Trump has been applying pressure? He's said repeatedly that the Fed doesn't know what they are doing.
Oh, well,
and he's been applying so much pressure on the US Fed to cut rates. You think that's going to play a factor? In your assessment?
When you cut rates, it sort of, eases the economy. That's why it's actually called monetary policy easing. When you want to cut the rates. So I saw a tweet by President Trump, I think yesterday, and he was mentioning that the economy could have been stronger if the economy had lower rates. So maybe the cut would be to propagate the US economy even further stronger. Because to say the US economy has weakened, I cannot say that. The numbers do not support that. At least over time.
The economy has been very strong.
But maybe make it even stronger, and that's what he wants. And again, I think there have been talks about recessions. Maybe seasons of negative growth. Maybe not this year, but certainly next year. So by trying to ease in the economy now, you will potentially push the recession further down the line. So maybe that could be another alternative.
Just to forestall a recession.
Potentially.
And just to keep our viewers updated, is the US Federal Reserve, which is the US Central Bank, the Federal Open Market Committee, which meets every month to decide on the cost of money, I'm meeting tomorrow. And top of their concern is that the fact that inflation is a big worry in the US, that inflation is not picking up as they want. And obviously inflation is a reflection of the general consumer prices. And obviously, really, when the consumer prices keep falling and approaching towards a deflation, is a big concern for the policymakers, because then if prices keep falling, then producers keep suspending any capex, any investments.
There's no incentive.
And the economy can actually get caught up in a spiral. And this is one of the things that will... So you see that the economy is more of a worry than even Trump's tweets? Maybe. Yeah, but Trump tweets also a risk to asset prices. as someone who's analyzing investments, Trump tweets, I'm sure you keep posted on Trump tweets. You could tweet something and then the stock price is just falling. And the Bank of England is also meeting on Thursday against the backdrop of election of Boris Johnson.
The Prime Minister.
And Boris Johnson, he's been a pro-Brexiteer, so staunch Brexiteer. Let's leave the European Union. you know, whether we have a deal or not. But and I think yesterday when I was watching news, he met the first Prime Minister of Scotland, and the lady actually said that Boris Johnson is favouring a no-deal Brexit, which is not good for UK asset prices. And as we've seen that, the British pound has been underperforming against the euro. And does this worry you? Does this present a worry to you?
As an investor?
A no-deal Brexit? Yeah, as an investor?
At least we're not exposed to
UK assets.
To UK assets. At least that gives us a sigh of relief. But if I can try to give my thoughts on why I think the currency.
Sorry to cut you. We have to ring the bell because the market, the Nairobi Securities Exchange has just closed. Let's have a bell ringing close and come back for the discussion.
Okay.
Sorry, just market is just closed.
Yes.
Just get back. You're not exposed to UK assets, but obviously this could spread to other markets.
Yeah.
You think this could spread up to the Kenyan Eurobonds?
First, I think we should see how this currency will be tomorrow.
Yeah.
After Fed.
Yes.
Based on how they decide to cut the rates, it could impact the about 8%. I think weakening or gain of the dollar against the GBP.
Yes.
But you see, we moved from an environment where the former Prime Minister
Theresa May
mentioned that they would certainly not have left the European Union without a deal.
Yeah.
And then now we're moving from that situation from one government to another, where they'll just live. Living without a deal is an option for them, and it's actually a very strong option for them.
Yeah.
So that introduced a lot of uncertainty amongst investors looking at Britain or UK or maybe just Europe and other
European assets,
other places they invest in. So that is why, and if it will affect other countries. Maybe certainly countries that
are exposed to UK.
Maybe.
Kenya we are exposed to UK. We sell a lot of flowers to UK.
Maybe that. And then companies that are probably dual listed, and maybe you'll have to,
you're
exposed to
some of the global companies, the multinationals that dual domiciliation in the UK and the EU,
like Airtel Nigeria.
Yes. Yeah. Even for instance, some of the global companies, like for instance, the banks, Goldman Sachs, these are US banks that have dual domiciliation. Obviously, London has been the headquarters of European financial services, but some of them, because without no deal, they've had to think of moving their headquarters out of London. And I think London should actually brace for a number of multinational exits. And let's wait and see how this happens. But let's get back to the continent. We were looking earlier on. I was looking at the stock market performances, year-to-date performance, and obviously Zimbabwe is topping the list, 29%. YTD returns in dollar terms, but obviously it comes with a risk. Zimbabwe itself presents a lot of risk. Ian, could you just give us that chart again, the one for stock market performances? And Zimbabwe actually is almost 30% up year to date. On that's in dollar terms.
Yeah.
I hope you're invested in Zimbabwe, by the way.
Oh well,
But what are some of the risks? I mean, this is a good performance. What are some of the risks?
One, the greatest risk for an investor, I think, is you can get in your money, but can you get it out? Yeah, that's a question. Yeah. There's been a currency issue hard currency problems in Zimbabwe. And part of the reason why you actually see that the stock market has done pretty well is because individuals and investors in the country are running out of options of where to place the money. Because if you can have hard currency today, but the value today and tomorrow won't be the same. So what do? I'd rather buy an asset, whether real asset, land, or even security markets, and mainly, of course, the stock market. And you see, with that increased level of demand, pushes up the prices. But Zimbabwe right now, maybe it's just a wait and see. But a lot of currency risk. Currency risk if you decide to invest.
South Africa comes second, about 11.59% performance, which is quite good. I mean, what do you think of South African assets? Are they
Well,
attractive?
South Africa, we're not big investors in South Africa,
Yeah.
but all I can say is now how do I don't know what your thoughts are on South Africa.
South Africa, well, I think the political risks for me are still very elevated. They seem to have died with the election of Cyril Ramaphosa as the president, but looks like they're coming back. I mean, the public protector last week tabled a report in which they say that Cyril Ramaphosa misled Parliament, some of those things, and this is huge ramifications for the political scene.
Yeah.
But I think with elections not in sight now, probably you could say that there are mild risks on the political side. But obviously, the currency one is always currency risk is always to watch, because remember, the South Africa has been battling a number of things, including some of the state-owned entities that are underperforming.
Oh yeah.
Yes.
Yes.
So it has exerted a lot of pressure on the physical health of the country. Yeah. And
Yeah, maybe
the other time that Eskom, I think they've given Eskom $4 billion in cash injection. Moody's came and said this is rating negative for South Africa. I don't know what they mean, but it's for me it's one of those jumpy markets for me. But they seem to have the markets, the asset prices seem to have shrugged off all this, and they're up 11.6% on USD. But there's been a bit of stability on the South African rand against the US dollar, because you can see the disparity between the local currency performance and the USD performance is not very wide.
Yeah.
Yeah, but one of your favorite countries is also in top 3, which is Egypt.
Yeah.
It's just up 11.17% on a year-to-date basis, and this is dollar returns.
Yeah.
And I know that you've been following this country for some time.
Yeah.
What are some of the sweet points of Egypt today?
Sweet points.
Yes.
Well, I'll answer that and partly go back to South Africa a bit. Maybe I start with SA first and then close with Egypt. I had some few friends visiting the South African market, at least recently.
Yeah.
And other than when remember when trade tensions early on in the year had cooled off a bit. Now investors could take on a bit more risk, and if you're now diverting money to Africa, so what assets do you chase? And some top of the markets that you just allocate to are either South African names or Egyptian names or maybe Kenyan names and Nigerian names. Yes. So that's partly the return there is partly momentum.
It's reflected on this chart.
Partly momentum. And I think the other thing is the level of confidence for the new president, Ramaphosa, is certainly better and higher than the predecessor. So maybe a lot more confidence. He promised a lot, especially I don't know if you had the State of Union address, trying to bring in reforms on the company you mentioned, Eskom. I don't know if that will pan out, but they'll certainly try to bring in reforms that will see that happens. Yeah. So mainly that counting on a better economy going forward with a better president now who is more focused on growing the economy and flows coming back to the country. Going to Egypt, I'll bring back the flows point again, and the fact that after the devaluation of the Egyptian currency in 2016, the country has seemed to be trying to really get back to its feet. They've been meeting IMF targets. They actually just received the last tranche, about $12 billion.
Ooh, that's a lot of money.
Yeah, it's a lot of money. Recently, I think as it's Sunday, if I'm not wrong.
As part of the IMF financing
the last tranche.
Okay.
The last tranche.
Okay.
So the big question here is how will the now economy perform going forward? The government had incentive for us to unlock the money coming from IMF. There are certain targets that I have to meet. Inflation targets.
Of course, it always comes with all manners of conditionality.
Yeah, exactly. But the fact that they have been able to unlock the money in full, then they no longer now have that. The money that could come. So maybe they'll relax. I don't know, but the president has shown to be quite steadfast in taking the country forward, and I hope he'll do more well, and that informs why you see part of the good return. The investors associating economic progress in the country to potential, progress in this corporates,
Okay.
and that creates demand for the Egyptian listed companies. And
And that's reflected that this chart that you're having here.
Yes.
Top of the bottom of the list, obviously, is not obviously, but Zambia is down 20% in dollar terms.
Oh.
Zambia going through a lot of fiscal problems.
A lot of fiscal problems.
Yes.
They haven't yet received money from IMF, so you can see if IMF themselves are not yet willing to give you money, then
And also, Zambia was also almost downgraded by one of the ratings agencies.
They were
super
actually,
junk.
They were actually, at some point, I think they were downgraded from CAA1 to CAA2, I think.
That's almost super junk.
Yeah.
Right? And they were almost at the point of defaulting on some of their foreign sovereign bonds, foreign currency bonds. I think that's one of the things that the rating comes inside it. That the debt distress levels in Zambia are obviously very high, especially the Chinese debt that they took over, the current service. And I think investors are factoring in these physical problems in the stock market performance.
Certainly.
And the currencies, obviously, there's a big disparity between the local currency performance and the USD performance, reflecting the weakness in the currency.
Yeah, not only there, but also even in the Eurobond space.
Yes.
I think the Zambian sovereign bond is the only sovereign bond in Africa that is negative in 2020, 2019. You saw was it last week or the week before, the president fired the former prime minister, not prime minister, rather finance minister, and appointed a new finance minister. Yeah. So if the finance minister, is the one who holds the accounts of the country.
It's sort of like our case here.
Yeah.
Well, this is a different case.
Well, this is a different situation. Okay. Yeah.
And another country to look at is Ghana, which is down 17.75%. And also another big disparity between the local currency performance and the US dollar performance. Ghana, obviously, the Ghana cedi has been very problematic this year.
Yeah.
And I think Ghana, the lack of the significant weakening in the Ghanaian cedi is also a disincentive for foreign portfolio inflows, right?
Exactly.
Yeah.
If you are exposed to Ghana, you're not only looking at the country itself, but you're also looking at how will the currency I report in. Yeah. How will it look like?
FX risk.
Yeah.
FX risk.
Yeah. So if it doesn't look good, then there'll be incentive for me to sell all my assets. Okay. Yeah. And that creates negative pressure on the prices. Yeah. So it will not only come down in dollar terms, but also in the local currency.
Yeah, we can see it.
Yeah, yes.
And really, just from the last bit of this is banks are just about to start releasing. Next week we have Stanbic releasing its half-one results. Do you have any expectations? Are they likely to be impressive results this year, the first half of the year, or you're not very bullish?
Previously, at least I think last year, we saw at least some of the big banks. The past, since interest rate capping, the interest rate cap regime was born, we saw a shift from lending to lending to the public to lending to government mainly. Yes. But now we are in a situation where we've seen yields really coming low.
They have really been coming low, actually.
They've really been coming low.
Yes, the yield on the 15-year now the other day was coming in at 12.34%.
You can imagine. Yeah,
15 years.
You can imagine.
That's crazy.
Yeah, and for the 91-day, it's usually one of the quickest.
Yeah.
You just check 91-day going for about 6.5%. And in the 180-day, 7.3%, and the 364 one going for about 8.9%. And this were, I think 364 was almost double digit.
Yes, just a couple of weeks ago. Yeah.
Yeah. So the banks will, and this has happened over the past. You can say Q2.
Yes.
Yeah, Q2. So in my opinion, banking management will be like, okay, fine. Do we continue lending at 8.9%? Or 7.3% or 6.5%, depending on the tenure of the loan, or do we try to now lend more? Okay, so lending has a higher return, but again it presents a higher level of risk. So you're not only looking at how will this impact my revenues, my net interest revenue, your revenues, but again you look at your NPLs. How will this be impacted?
Quite high.
Yeah, they've been. How will it?
So essentially, you're not very bullish on the Q2 results.
if they allocate the capital well and prudently, and of course taking maximum care in giving out the money, then I'd want to at least look at a few names here and there. And then part of maybe the shift could be, you never know what could happen. I know the finance bill is currently being talked about.
I think the debate is just coming up in the next couple of weeks.
Yeah, a couple of weeks or even, I think a couple of weeks. So how will that, head? Yeah, if in case something positive comes out of it and say interest rate caps are now gone, you'd want to be fully invested with lending, because if it comes out today, you send a note to your customers the following day.
My sense is that I don't think that the interest rate cap will move away, because, and I've seen that the sponsor of the architect of the interest rate cap environment, Jude Njomo, who's the MP for Kiambu Town, has actually kicked the ball running, and he's moved an amendment to comply with the High Court order. No mention of adjustment of the caps, so it looks to me like they quite intend to keep the caps. Which means for me the results will actually not be very, very nice, especially Q2 results, and even full year 2019 results will not be. And I think for me the best my trading strategy on banks should be to short them, because I don't think because they don't want to lend, as you're saying here, they just want to keep buying treasury. But in an environment where the yields keep going down.
We saw some change in Q1 with some of the banks now having some appetite to lend. If you look at equity, Q1 2019 versus Q1 and 2018, net loans grew about I think 12.7%. Lending to government securities grew by about 12.7%. So you can see, and
there's a slight uptick.
Yes, they are actually at par. But now, net loans have a higher absolute terms is much more higher. I think almost twice. Almost twice for government securities. So a 12.7% increase for net loans in absolute terms is much more higher than for government securities. So we are seeing that we've seen that shift a bit, at least when Q1 results came out. I don't know if they will maintain the momentum. I know, like myself, I think a couple of weeks ago, a number of sales persons from different banks were trying to hunt down
deposits.
Not deposits, but just myself as a person, some of my colleagues, to come in and become members and and try to obtain loans. So if you see that level of aggressive push, if you see that aggressive push from some of the big banks around, and then it could be implying something.
Let's wait and see, and that's a very interesting point. I think let's wait and see what they report.
Let's see.
In the next couple of days, as they start, the earnings season kicks off. And just to update our viewers, the bank's Q2 earnings season kicks off in earnest next week, and some of the names to watch out: probably Equity, KCB, Barclays, Cooperative Bank, Standard Chartered, and Stanbic kicks it off on the 7th of August with its Q2 results. Something to watch out for. It's been nice having you here, Rolly.
Thank you.
And very insightful discussion, especially on the geopolitical risks. We've been looking largely on geopolitical risks, especially the election of Boris Johnson as Prime Minister has increased the risks of a no-deal Brexit, and we've seen UK assets being hammered, especially the GBP, the British pound. That's it from us today. Have a good afternoon. See you tomorrow. We'll leave you with market close statistics.